ready to?
Is there a button on there to advance?
No, there's not. Are you guys ready to start this? I guess. So I'm gonna announce them to come out. Here we go. It's Revtech Labs Class 18 Demo Day. Please welcome Class 18 Program Manager Casey Jackson and Revtech Labs founder and CEO Dan Rosselli.
Thank you. Thank you. Hi, everyone. I'm sure you're thinking to yourselves, that is not Dan Rosselli, in which case you're welcome. Unfortunately, you are stuck with me today. I'm Ashley Everett, the Director of Operations at Revtech Labs, and I am joined by Andrew Hicks, the principal of our venture fund. Thank you. So we are here today for the 18th demo day for Revtech Labs. Let's clap, that's a lot. Yay, keep your energy up, guys. We have a lot of companies to go through. So first and foremost, we just want to take the time to thank our team. None of this happens without them, without Dan and Sarah's leadership, without me yelling at people, without the capital team, and without our incredible program team and events team. None of this happens without them. So a big thank you to the Revtech Labs family. So we are here mostly because of the work through the foundation. We did make a decision to pivot and move the accelerator program to a 501c3, as Dan and Sarah's vision is to create a community asset for the city of Charlotte. So we focus on fintech and insurtech founders from around the world. We say that we're predominantly focused on post-revenue, post-growth startups, but the founder is at the heart of everything that we do. So our program is customized to each founder's experience and their unique goals and objectives so that we can create maximum impact. So we really take pride in that very customized approach and hopefully helping each and every founder that goes through our program to really propel their growth post-program. I said program a lot there, sorry. So I'll hand it over to Andrew to talk a little bit about the fund.
Thank you, Ashley. Yeah, so again, want to apologize for Ashley and I being up here as opposed to Dan and Sarah, but we are the younger, better-looking version of them, some might say. But so we'll take a chance and give you a little bit of an overview about Revtech Labs Capital, which is the venture fund associated with Revtech Labs. So obviously, we have a massive connection to the accelerator. We view it as a unique asset that allows us to get in front of some of the best companies in the country. Each year, we are contacting thousands and thousands of startups, landing on 15 investments per cohort. At this stage, we're approaching almost 150 total investments between the two Revtech Labs capital funds, which is extremely exciting. We've had thousands and thousands of applicants in order to get to that number. Consistently voted as one of the best fintech accelerators in the entire country, something we're extremely proud of. Just Class 18 alone, so the 14 companies that you're going to see present today were 14 selected out of almost 6,000 companies that we spoke to during this process. From that, several hundred applications, we're able to whittle that down to 82 companies that got a semifinal interview with us. Of those, 35 were selected for selection day and landed us with our 14 investments for this cohort. A lot of stuff that we're extremely proud of is intentionally looking for founders in areas that others aren't. That results in 39% of this cohort being having a female founder. Also 66% having a founder of color on the team as well. Like I said, very intentional when it comes to our sourcing efforts. Like I said, we look everywhere. We do not let geographic constraints get in the way. Most of our companies are based in North America, but we have founders sitting all over the entire world. Very broad when it comes to fintech and insurtech investments. There's nothing that is off limits for us. The things that we think we can move the needle on from a strategic value creation standpoint with our fantastic mentors, our fantastic partners, is something that we will actively consider. So nothing is off limits when it comes to fintech or insurtech broadly defined. So from our applicants, on average, they've raised roughly $465,000. Most of the companies we work with are post-revenue, post-MVP, and are actively looking to pour jet fuel on their solution. And that's kind of where we found ourselves being the best fit, is with those companies that are doing roughly, $10,000 to $50,000 in monthly recurring revenue.
All right, before we turn it over, of course, we want to take this opportunity to promote a few more things coming up. So obviously, Class 19 applications are currently open. So if you are a fintech founder in the room and you want to apply for our next program, we are accepting applications until June 25th. This QR code should take you to that application. We have our upcoming Health Innovation Summit in September. It's a one-day summit at the Mint Museum on September 20th. This QR code will take you to a 25% off discount as a thank you for coming out and showing support for today. And then we also have Venture 135, which is the capstone of our Class 19 program. That is here at Barings World Headquarters. It'll be in November, and of course, if you follow the QR code, you'll get a little special discount for joining us here today. All right, so before we move into our cohort, this is one of the largest classes we ever had, which means you are going to sit through 14 pitches. And so we thought, what is a fun way to add a little bit more to this, make it a little bit more fun? So we have some investors backstage that we're gonna bring out, and they each have $1 million. Not real, because we have a budget. But they all have $1 million, and they are going to sit and weigh in on all of the companies pitching today. All of our founders have been working over the last 12 weeks on their business and their pitch, and real investors are going to make a decision on kind of how they would net out if they were actually pitching them. So I want to welcome some of our investors out. We have Isabel Steislinger from Revolution. Maybe. That's Casey. Sorry, can't hear very well backstage. Can you grab? Okay. I'm just going to keep announcing some of the investors if they can come back. So we also have David Moon from Cultivation Capital. Yeah, we can keep clapping. And we have Luke Timberlake from Fintech Ventures. Sorry, stumbled over that. Oh, sorry, here we are. Sorry, guys. I know it's really hard to hear. So we'll go over here and do, so David Moon from Cultivation, Luke Timberlake, not to be confused with Justin, Isabel Steislinger from Revolution. Here we go. Calvin Clayton from Long Run Capital. And last, but definitely not least, maybe you've heard of him, Andrew Hicks from Revtech Labs Ventures. Thank you. All right, I am going to bring Casey Jackson up on stage to kind of get us started. She is the heart of the program, and she is our program manager. So I will bring her out, and I will get off stage.
Testing. Awesome. Thank you everyone for being here today. I'm so excited for Demo Day, specifically because that's my area of expertise. My name is Casey Jackson. I'm the program manager, so I work very closely with the founders in our active cohort and our alumni and mentors. Without further ado, I love to intro our first mentor. He is a product software developer, and he is also the CEO of Stealth Startup. He spent a lot of his time at Credit Karma. Please welcome Andy Jenkins.
Thank you. It's my pleasure today to introduce Alex Miles, CEO of Breakthrough. My name is Andy Jenkins. I'm a software product engineering leader. In 2016, I helped establish Credit Karma's East Coast headquarters here in Charlotte. I'm also board chair of Commonwealth Charlotte, which is a local nonprofit that provides financial capabilities for Charlotte's low-income wage earners. Now, in both of those capacities, my focus was in helping to make financial progress possible, especially for those who our current financial system has left behind. So when I heard Alex pitch Breakthrough at the Class 18 welcome party, I was instantly hooked. All the founders that you'll see today have courage, they have intelligence, they have grit. What set Alex and Gene apart for me was the story and heart behind their product and company. Breakthrough is a digital marketing platform that allows brands to connect and directly reward users with a focus on young people and financial literacy. By creating this direct, innovative model, they're able to both allow brands to connect directly with young people, as well as reward young people and provide pathways to financial enablement for them. Please join me in welcoming CEO of Breakthrough, Alex Miles, to the stage.
Hello, everyone. First pitch of the day, so get excited. I felt a little bit like Britney Spears back there, backstage, ready to come out and talk to you all. So my name is Alex Miles. I'm the CEO at Breakthrough. As you can already hear, I'm not from around Charlotte. It's my second time in Charlotte. I'm loving my time here so far. I'm from Sydney, Australia. I played professional rugby back home, have worked in marketing and technology now for over 13 years. I landed in New York 8 years ago. Was working in my job and wanted to stay in the rugby community, and I started coaching some high school youth rugby. I landed in Harlem. I was coaching a high school girls rugby team. As you can imagine, a lot of the girls weren't afforded similar opportunities to some of the other students that I was coaching. In particular, building wealth, finding access to education and to their career. I started to go a little bit deeper. I started to pick up the phone. All of a sudden, I was landing these girls out of the projects into full-ride scholarships at Brown, Harvard, and Dartmouth, and I thought, maybe tech can start to scale this. I looked into my history and experience. I started to learn that brands are desperate to reach youth. Over $500 billion is spent every year trying to reach them, yet 40% of that spend goes to nothing, leads to no conversion, no data at all. The effort is only increasing. We all know, some of you have children, the attention spans are shot, the supply of content's only increasing, and loyalty and trust is diminishing. So I thought, maybe I can connect the two. We then created Breakthrough. Breakthrough is an earning platform for youth, 13 to 26, where a young person comes on, they learn about a company, they learn about skills, financial literacy, and they get paid into a digital wallet instantly. We've now partnered with PayPal, Uber, Amazon, Coinbase, and Dunkin', so they can go and spend money instantly out of a digital wallet. What's cool about this is we are coining and pioneering a new space called rewarding content. Yesterday was engaging content. Tomorrow is rewarding content. Young people actually are rewarded for the content that they look at, and they're also given a skill or educate or knowledge, which is adding to building wealth and access to capital. Not only that, kids love it. Over 85,000 students have downloaded and registered our app. If you go on the App Store, we've had over 1,300 reviews, a 4.9 out of 5 rating. If you can get a student to stay on an app for more than a week, I'll listen to you. These kids are coming back at a rapid rate, and over 75% of the students come from underrepresented backgrounds. Gene here is my co-founder. We have over 25 years of experience in marketing and tech. He faced this problem as a student himself, me as a coach, uniquely positioning us to succeed and grow this company. Not only that, we're being backed by some of the biggest investors in the space. Goodwater Capital, Techstars, 37 Angels. We even have TikTok superstars that have given us money with over hundreds of millions of followers on social alone. What's really cool about our product is we're unlocking digital wallets for youth. There's no deposit, no fees. They're able to come on and earn, spend, send, and invest this money as young as 13 years of age, which is actually driving tangible impact. How do we work with companies? Companies come with us, we bring them onto an annual package where they're having constant engagement with youth, and we bring them onto our branding rewarded content platform. We guarantee 100 times guaranteed brand exposure, more than what they've ever seen before, and then we're delivering consumer insights that are unique to their business. We have over 30 customers today since launching revenue last year. WeWork, Front Office Sports, Brown Advisory, to name a few. One use case that we had was a student loan business, College Ave. We were able to drive hundreds of thousands of impressions, hundreds of applications that they're seeing now consistent in their engagement following the campaign and the project that they ran with us. Just lastly, if you're in the crowd, we just closed a round of capital. We're interested in partnering with more businesses and bring them on into this new space. If you're looking to reach youth in terms of positive brand association, impact, education, come and talk to us. And just lastly, we are in conversations with retail banks at the moment. I mentioned the spend side of our business, PayPal, Uber, Coinbase. We want to bring a retail bank. Think about the bank account you have today. I guarantee it's probably the one that you opened up in high school or college. We know the power, and we've figured out an acquisition to bring on young people, and we want to support them with a retail bank. If that sounds like you, please reach out. Otherwise, thank you very much for your time. Hope to connect with you after. Thank you.
You all are going to be seeing a lot of me. I get the pleasure of introing each mentor. So next we have Payments and Banking Director, Head of Partnerships at Link Financial Technology. Please welcome Tyler Hune.
Hello, everyone. As she said, Tyler Hune. I've been in the payment space for a little over 15 years. This is my third year working with Revtech Labs as an advisor to some of the groups going through their cohorts. I get the privilege of introducing Ryan from Chase today. Super excited about it. I've been doing this for a little bit, and I think that their concept that they put together is just brilliant. It combines something that we've all probably had to experience in our lives before with the auto manufacturer warranties running out and pesky phone calls and making it a more consumer-friendly experience. I think Chase hit a home run building exactly what they built. So with all of that said, I'd like to introduce Ryan from Chase. He is their co-founder and CMO. Ryan?
Hello, everyone. I'm Ryan, co-founder and CMO at Chase, the first online marketplace for extended car warranties. So first, I want to take you back to 2015 and give you a little bit of a story about myself. So I didn't really come from much growing up. So for the first 16 years of my driving career, I had only 2 cars, and they were pretty crappy: a 1992 Chevy Cavalier and a 2000 Pontiac Grand Am. So when I finally had enough money to get my dream car, which was this BMW convertible, I got it. I bought it used. It was certified pre-owned. It was a BMW, so I thought I'd have it forever until about 3 years, probably like 2019. I pulled it into my garage, and there was a weird knocking sound, and there was some smoke that was coming out of the engine. So, uh-oh. So I took it to my trusted mechanic the next day, and he took it back, and it's kind of like waiting for the doctor's diagnosis, and he comes back. I was like, "How is she, doctor?" He's like, "It's not good." He's like, that knock you heard is the knock of death. And I said, "What does that mean?" He goes, "Well, I need to replace the engine. It's going to be about $10,000. I said, well, I don't have that kind of money. And he goes, well, I hope you have an extended car warranty. Well, I didn't. So my options at that point were limited and honestly pretty terrible. It's either pay for it and rack up $10,000 of credit card debt, or sell it for parts, lose a lot of money, and be without a car. And you could see my car was actually still pretty new. This was taken the last day I had that car, so I didn't even have 58,000 miles on it. So this is actually a pretty common story. In fact, 60% of Americans can't afford a $1,000 car repair bill. There are 220 million cars on the road that are driving without this type of protection. So while everyone has car insurance in case they get into an accident, you're actually 50 times more likely to have a breakdown than get into an accident. So I learned my lesson. I said, for my next car, I'm gonna look into this extended warranty thing. And what I found was the shopping process was actually pretty terrible. I couldn't even get a quote online. So I was going to the major brands that you see advertising on TV, and I finally thought I was getting a quote, and no, I had to call in. So I'm trying to call this company, they're giving me one option. It seemed expensive, but I didn't know what was included because I'm on the phone, I don't have my computer in front of me reading the contract, and there was no way to compare. And probably the worst thing too, as you guys might know, is I had to give them my email address and my phone number. So my gosh, the robocalls and the spam. It's a terrible process. And so with my background and my entrepreneurial spirit, I was like, we've got to fix this. This can't keep happening. So that's why we created Chase, which is, again, the first online marketplace for extended car warranties. We give our consumers the ability to compare, research, and review plans that are right for them, their vehicle, and their budget. And they could get quotes without having to enter their information like email address and phone number, so no spam from us. And lastly, when they're ready to choose, they've got 11 providers in which they could choose from, including some of the largest in the industry. And they could get protected in just a few clicks. So again, they do it completely online. They don't have to talk to anyone. And the best thing is they could save up to $1,700. Since we cut out the middleman, we're able to go direct, and we don't have the fees like commissions or call center overhead. So we pass that savings along to the consumer. So geez, if Chase had existed back in 2015, I would have only been paying a low monthly premium. I would have been back on the road with my beloved car, and I wouldn't have had to foot that $10,000 repair bill. Well, luckily we do exist. In fact, our consumers are already buying our product the modern way, which has led to $30K monthly average revenue at a healthy margin of 50%, at a CLTV to CAC of 2.5. And it's a huge opportunity. If you recall the 225 million cars on the road that don't have this protection, it's about a $180 billion market. If you break that down into eligibility of vehicles and those that want to buy completely online, multiply that by our margin, it's about a $4 billion opportunity in the US alone. And we have the team that could scale this. In fact, my background is on the car insurance side. I led marketing teams at Geico, Allstate, and most recently the Zebra, which is a large comparison marketplace in the insurance space. And Redo, who's got a finance background, was at Goldman Sachs for a number of years and then started a successful B2C company. And then Phil, who's got product and technical experience and has been a fintech entrepreneur in a past life as well. Lastly, we're funded by a dealership who's been selling these warranties for over 10 years themselves. So we'd love to have a chat. If you're a warranty provider, we'd love to have you on our platform. We could give you guys more sales, but also give our consumers more choice. Insurance carriers, it's a great product to cross-sell or upsell to give your consumers full protection for that vehicle. And also financial institutions. So when consumers buy a new car or financing, or also used cars and refinancing, it's a great shopping time for them as well. And if you're an investor in the room, we have $250K left in our pre-seed round. The details are listed there. We want to use that money to get $100K monthly revenue, which will set us up for a seed round in Q4. So thanks for your time, and I hope you will join me in trying to get rid of memes like this forever. Thank you.
All right, so our next mentor intro is one of our very own. He is head of partnerships at Revtech Labs, and he's one of our sponsorship relationship partners. He's also a former pro baseball player for Tampa Bay. Please welcome Richie Schaefer.
Hello, hello. There we go. Welcome, everyone. Thank you. As Casey said, my name is Richie Schaefer. I am the head of partnerships at Revtech Labs. So my first quick little nod is, if you'd like your name right here, please email me because I'm in charge of that. So let's talk about CloutDesk for a second. As Casey mentioned, I was a professional baseball player, and I started doing some social content on the side and built out a little bit of an audience. And so when I heard Trevor's pitch, I realized that the complexity of the creator market and the agency market from a tools and infrastructure perspective was lacking tremendously, and that's kind of what drew me immediately to CloutDesk. Trevor is brilliant, and CloutDesk at its core is the infrastructure layer for creators and agencies to scale and automate their workflows. It's a killer, and I'm just really, really excited for Trevor. The last 12 weeks working with him has been great. So without further ado, please welcome Trevor Mengel.
Check, check, one. Okay, and we're on. Hi, everyone. How are we doing? I am Trevor Mengel, the founder and CEO of CloutDesk. The gentleman up there is also me, just prior to a shave. All right. So in any case, before we get started, let's see if everyone is still awake here. So quick show of hands exercise. First show of hands, raise your hand if you know what a social media influencer is. Social media influencer, okay. Solid group. Now raise your hand if you think being an influencer is a real profession. I see hands, a few less. Okay. Well, I guess the fact is, well, first of all, third question, how many people think that $100 billion is enough money to pay attention to? Okay, I should be seeing lots of hands there. There we go. All right, well, the fact is that within 5 years, marketers will spend over $100 billion on creators. And now that I have your attention, here's 6 facts that you need to know about this market. The first, it's growing like a weed, 56% on average over the past 5 years. Secondly, it's growing so fast because brands are trying to reach young people who are spending more and more time on social media, over 4 hours a day on average. Now, agencies control 3/4 of the budget that gets spent with creators, which is important. We'll come back to that in a bit. But that budget was once spent on larger and like massive celebrity creators, like the Kardashians, people with millions of followers. That shifted to smaller and niche creators. And why is that? Well, niche creators perform on average 6 to 10 times better than their larger peers. So it's pretty significant. And if you're dealing with more creators, there's also then more contracts, more relationships to manage, hundreds of times more content to approve, hundreds of more invoices to pay, and hundreds of more checks to cut. So if you're an agency, either you can increase your operational headcount by 10 to 100x, or you can use CloutDesk. So CloutDesk, we've solved this problem by creating the first programmatic protocol for influencer marketing. And our platform facilitates partnerships between creators, who are also called influencers, brands, and agencies, helping them earn more revenue, deliver better results to clients, and increase their profitability. So what's really cool and really unique about what we're doing is that everything in CloutDesk comes down to our contract standard, which is the first of its kind. When contracts are generated on CloutDesk, first of all, there can be over 10 million different variations of them. But we take all of the data from those contracts to automate all of the previously manual work that marketers and creators would otherwise have to do. So the days of sending 3 follow-ups to get a piece of content, on generating invoices from scratch, on making sure that every invoice that comes in is compliant, all of that is gone. CloutDesk does all of this work automatically. And so we've been able to build such a useful product because we built it for ourselves. On the team, we have over decades worth of experience in creator marketing, in building programmatic protocols for media marketplaces and in advertising technology. There couldn't be a more perfect team to build CloudDesk. We take a 3.5% fee on every transaction that goes through our platform. This is revolutionary because it's about 10 times lower than the nearest comparable solution. So this means more money gets into the pockets of creators, and there's more working budget, more money put to work as a marketer, which results in higher ROI. In any case, this is a couple of the reasons why agencies love CloudDesk. We help them become 10 times more efficient, and by doing so, we've helped them increase profitability by over 60%. And I can share a case study with anyone who wants to see this later. But collectively, we have saved them, to date, since launching in November, almost a year's worth of total time. And we're just getting started. So marketers have increased their budgets on average of 83% since we launched. We have $40 million of influencer revenue in our pipeline right now. And we believe that with the right resources in place, we can hit $1 million in ARR by the end of this year. So what do we need in terms of resources? Well, firstly, if in this audience you either operate or know someone who operates a PR agency, a marketing agency, anyone who deals with creators, I would love to connect and hopefully facilitate an intro. Secondly, we see an opportunity to increase our margin beyond 3.5%, but upwards to 6% if we can factor the invoices generated on our platform. We own the invoice, we own the contract, we already have all the data that's needed to realize this. We just need the expertise. So we'd love to speak with anyone who has experience in invoice factoring. And then lastly, if you have an interest in influencer marketing, the creator economy, and an appetite for adventure, and would like to join us on this journey as a startup, we will be opening our pre-seed round in the coming weeks to angels and venture funds. So thank you.
For our next mentor intro, it's another one of Revtech Lab's finest. It is our fund principal and venture capitalist. Please welcome to the stage, Andrew Hicks.
Thank you, Casey. So I have the pleasure of introducing Steve Latham, the CEO of Donate Stock. So funny enough, Steve is the founder of this cohort that I've known the longest. And we were introduced by a mutual friend about a year or two ago named Julie Valentine out in New York. And I think we were the reason why she introduced us, I think, is because we were the only two Texans I think she's ever met. And she said, you guys should meet each other. I don't really know why, but I'm really glad that she did introduce us because this has come full circle. So I'm incredibly happy that I was able to work with Steve. When I first met him and learned about Donate Stock, I was blown away by the team, the concept, and learning more about charitable stock gifting. But being able to see him and watch him operate has blown me away over the last few months. Steve has 3 successful exits under his belt, and I think this will be the 4th. We're incredibly bullish on the opportunity. And I truly do think that Steve and Donate Stock are going to unlock a billion-dollar market in charitable stock gifting. So with that said, Steve's going to come up here and tell you how they're going to do it. So I'd like to welcome to the stage the CEO and founder of Donate Stock, Steve Latham.
Thanks, Andrew. Hey, everybody. My name's Steve Latham, co-founder and CEO of Donate Stock. So I would wager that most of you own securities, own stocks, and that most of you support nonprofits in some way, but that very few of you, if any, have ever actually donated stock to a school, to a charity, to a community foundation. Maybe some of you have. Just show of hands. Has anyone done it here? 1, 2, 2, 3, maybe 2. Okay, that's par for the course. So hopefully that changes today. If nothing else, you'll be inspired to do a new way of charitable giving. So why stock? Well, first of all, that's where the money is. That's where household wealth is concentrated. It's not the checking account. It's not your credit card availability. It's your investments. That's where 90+%, especially for households over 45, 50 years old. It's also the most tax-advantaged way to give, and this is the thing that very few people are aware of. If you own Apple stock and you sold it, you've owned it 10 years, you sold it, and it's about a 15x gain, you're going to pay capital gains tax, and then you can give the net proceeds back to charities, and you can write off that smaller amount. If you donate the stock, you actually not only get to write off the full fair market value, but you also get to avoid the capital gains tax. So it's really a transfer of wealth from the IRS to the charities that you're supporting, so you can actually have more impact with the same gift and avoid taxes 2 ways. So it really makes it unfair in terms of the best way to give to support nonprofits. It's a big market, as Andrew mentioned. We scoped this at about over $1 billion, just an initial TAM. I think we could double that through adjacent markets like private stock, LP interest, et cetera. So it's a big opportunity that, frankly, its time has come. The problem is that stock gifting historically has just been a 1% solution. We call it biased and broken. Very few people are aware of the benefits that I just explained. And if you've ever gone through the process like I did 15 years ago, you know what a painstaking process it is. It took me the better part of a week to execute a stock gift. And it was just not worth the hassle. And in 2020, I was thinking about that experience again, and that was really what, realizing no one had solved that problem, that's what led to the formation of the company. The other challenge on the back end is that nonprofits actually, 99% of them have been excluded from stock gifting. So if you're a small charity, you frankly cannot get a brokerage account from the big retail brokers because of the AML and KYC compliance requirements. Those that can get brokerage accounts struggle with the fact that it's a very manual process. It's a very costly, it requires a lot of people involved in every transaction. And the biggest problem is the donor's information is not attached to the stock. You just see stock showing up in your account and you don't know who it's from. So unless the donor told you, I'm giving you 10 shares of Apple from Schwab, you have no idea whose stock it is. So it creates a donor relations problems for the larger organizations. So this is why it's just been one of these problems that's languished there for years. But we've changed that. We made stock gifting accessible, easy, and scalable. That was supposed to animate slower. Think of us as PayPal for stock gifting, just a quick, easy widget. In a few steps, you can execute a gift in minutes, which took me a better part of a week to do 15 years ago. And we've also made it scalable and easy for nonprofits, no brokerage required. We can convert this stock to cash and send it to the charity the next week. That means they can start promoting stock gifting even if they don't have a brokerage account. We give them the assets to do it. We have the only end-to-end platform in the industry that allows us to manage the entire process and solve the reconciliation and acknowledgement problem. We even do the acknowledgement for them to their donors. And now we're scaling through channels by being embedded by online giving platforms, companies like Blackbot and Classy, et cetera, that we are their stock gifting solution. We are the market leader. We've got a growing stable today of about 1,300 nonprofits. That's in the last 2 years, mostly organic. We should be about 10,000 by the end of the year through our distribution strategies. So we've been growing pretty quickly. We've processed about 13 million in stock gifts, over 1,000 gifts in the last 18 months, and we're really just getting started. How we scale through channels is first through nonprofits, the online giving platforms. These, it's kind of hard to see, I compressed 2 slides into one, but basically there's about 20 companies that power probably 80–90% of all online donations. None of them have a stock gifting offering. They all need that. They view that as just kind of a easy add-on, and we're offering that to them on a rev share basis. We're then targeting financial institutions, so broker-dealers, wealth managers, RIAs, wealth tech platforms. So to use us, if you're an advisor executing gifts on behalf of a client, recommend us to your clients because it's really easy to do it yourself. And ultimately to embed us so that my vision is 2–3 years from now, everybody will be able to buy, sell, or donate stock directly from their brokerage or wealth management account. Financially, we have a very high operating leverage, low asset light model. So once we reach break-even profitability next year, we can scale quickly and make a lot of money. To that end, we're raising a $3 million seed round, and I'm happy to talk more about that. We have a successful team with 80 years, multiple exits, backed by a great advisory board, so happy to chat more. Our ask is introductions. First of all, use us, donate stock this year, and secondly, introductions to universities, nonprofits, financial institutions, advisors, wealth tech platforms. So with that, thank you. Put stock in something that matters. Remember this year to donate stock. Thank you.
Our next mentor intro, she is a tech innovator, co-founder and COO of Benekiva. Please welcome Bobby Shurtov.
Thank my mics. Yep, thank you. Good afternoon, everyone. I am so excited to be introducing two innovators that I've had a privilege of mentoring during this process, during this cohort process, InsureAware with Patrick and Rajesh. And what they're really trying to do is to create a solution to complete the value chain from lead gen to enrollment, leveraging AI and ML models with dynamic data. I can go on and on. I'm going to let Patrick talk a little bit about his company, but a couple of use cases, because data is so important in our industry, especially in insurance and financial services. So as you hear their pitch, look at the different use cases. Go talk to Patrick afterwards, because the use case that I'm very excited about, because I'm on the claim side, is really taking that Claim 360 outlook for how do you turn a claimant into a potential revenue driver for an insurance organization, and InsureAware is going to be a big portion of that. Thank you.
All right, hello everyone. I'm Patrick Bowen, joined by my partner, Dr. Raj Christian, and we're here today to tell you a little bit about InsureAware. So, what's the problem that we've identified? Well, basically, life insurance companies, distributors, agents do a really poor job of effectively staying in touch with their customers throughout the life of that policy. And there are reasons for this, largely due to, or in part due to, a poor compensation structure, front-loaded with heaped commissions. Also, there's infrequent and often generic and non-specific communications to those customers throughout the life cycle. Also, agents come into the business and agents leave the business. There's a lot of churn and a lack of leveraging technologies that exist. And there's also a concern at the carrier level that the effort was made to put this policy on the books. We don't want to disrupt that recurring revenue, right? So these are some challenges facing the industry. And as a result, the communications, the carriers, the agents, the distributors, they're losing effectiveness, losing relevancy in staying in touch with those customers. So at InsureAware, we've come up with what we think is a solution for that problem. We are a SaaS platform, and we are leveraging AI and machine learning to provide timely, targeted, and relevant campaigns and provide digital solutions. So when we think of those problems from the previous page, where we had, in that case, the heap commission or front-loaded compensation structure, we are helping companies and agencies increase long-term value of that client. When you think of the agent churn, agents leaving the business, we're using technology to leverage that to provide customer intelligence to those carriers and to those advisors. There are regulatory risks within this industry as well. We provide a compliant solution. And fear of disrupting that revenue stream, well, by leveraging what we have, there's confidence to upsell those clients and, again, increase that long-term value. And the poor communication, what we do is we have triggered engagements that we provide through the digital marketing on our platform. So how does this work? If you think about it, there's a whole world of data that exists out there today. When you came in this morning, you probably checked your smartphone. You might be on it right now. And you went on your laptop. You've come and gone. Everywhere you go, you're leaving behind that digital breadcrumb. We're collecting from that universe of data and really focusing on three particular things. Who are clients within a book of business that are showing high propensity, high intent, and the ability to purchase a product? And where we come in is in the middle. We have worked with several data providers, credit bureaus, and created our own unique algorithms that are constantly learning so that out of that universe of data, we can pull out of a book and show who are typically those 2 to 3% of clients or prospects in a book of business flashing intent for an insurance sale in any given month. So, who are we? Well, Raj and I bring 50 years of experience within the life insurance industry. Mine coming in the distribution leadership area of the business, Raj in technology. Most recently, we worked together for about a decade at Legal & General America, a large brokerage company here in the US, and we saw this as a persistent pain point. How do we get agents, how do we get carriers in front of more interested clients? So let's talk about traction. We took about 18 months in development, in testing, in talking to different folks in the industry as we built out our platform. And we, in the fourth quarter, went to market with some pilots, both paid and unpaid, got really good proof of concept, and have some recurring customers out of those pilots. Then in the first quarter of this year, we put on 4 new clients. One of these, a large national marketing organization, another, a fraternal life insurance carrier. And as we've gone through into the second quarter now, we've got 3 new accounts to close in the second quarter, a large and growing sales funnel. We've got a co-op with a large insurance carrier and a couple of their key agencies. And in addition to being part of this Revtech cohort, we also were recently accepted into the FinTech sandbox. So $175,000 of booked premium for this year, and we are continuing to grow. And again, want to emphasize, we are not a company that's building right now. We're a company that's enhancing. We have a product in market being used and growing. We do have plans to expand. A couple of testimonials from folks using our product currently. One comes from Tony Wilson, who's an EVP up at One Resource Group. They just doubled their spend with us recently. They're having good success utilizing our platform, and we are, he is giving us referrals into some new businesses as well. Another is an agency here in the Southeast, and just an example, a use case of using what we've identified as those intent signals where someone was able to connect and upsell a client that they had put on their books years ago. So what are we asking for here today? Well, we've got capital needs. We are raising $3 million in a seed round to accelerate our growth and to continue to expand our product offerings. Really broken down for product development in adding on to what we've already built, in sales and marketing, and then operating capital. We're also looking for introductions. Those of you in the room today who may be interested in what it is that we offer, or might be able to introduce us into those who would find use in what it is we've brought to market. And then B2B marketing expertise is always something that we could use assistance on. And then finally, the sources of capital. So with that, thank you for your time. This way.
All right, so I get the honor of doing a mentor intro. I get to intro one of our Class 18 founders. It's been lovely to work alongside of him. I'm delighted to intro Andrew Turnagain, CEO of Insured Nomads. A little bit about Insured Nomads. This team has built insurance and employee benefits for the modern day company that has operations in multiple countries, that has a work from anywhere program, remote workers, as well as a distribution team. Andrew is very, very passionate about protecting people, whether they are traveling around the globe or while they are at work. As he has done many travels in his experience, he wants to protect those as well. Please welcome to the stage, Andrew Turnagain.
In 2019, we started out to build health insurance for the modern workforce, not knowing that a few months later in 2020, the workforce would shift with the pandemic. Now, with that, the spotlight was shed on how we would be working around the world. It's been interesting to see how what we've built has been in such high demand. We started out with the international employees. You know, you're probably familiar with Aetna International, Cigna Global, the companies that serve the international assignee for multinational companies. You know, Aetna, you're all familiar with, $22 billion in annual revenue, $1 billion of that just for the expat. But then for the modern company, that's the local employees of these international companies have been underserved. There's not been a solution for an efficient platform where health plans can be delivered for their local and their cross-border employees, and then also those that are able to work remotely around the world with short-term plans. So today I have the pleasure to introduce you to my colleagues who've come from the legacy carriers, United Healthcare, Global, Aetna, MetLife, and others. We've built up a product set with a tech stack that has been just exhilarating really to bring to the market over these last few years. The incumbent oligopolies have kept executives risk averse, actually. And so the opportunity that we have has been not just for an efficient product, but the actual delivery and re-engineering of what coverage should look like for people around the world. So, you know, the time is right for what we've built. The demand is high. And so as we've built this robust benefit set for employees, pairing it with the technology, the stack that makes it useful has been what the industry, what the consumer has been seeking. So we have the opportunity to unify and to really simplify this whole process. With this, we've integrated a MasterCard so that you can easily pay at the hospital when you're leaving. Integrated mental health care by video, phone, text, in languages around the world, whether it's German, Hindi, Arabic, Swahili. Africa and Asia is our predominant market. The world is our playground with this. So this is going beyond just the healthcare coverage. Yes, many of those are mobile, but others are in their home country. They're not traveling. But the employer didn't have a way to offer them healthcare without going country by country, finding a broker in every place. And so the solution set that we've put together goes beyond that fine print that they previously would have gotten in a PDF or a packet in the mail no one ever touched, into a set that really saves the HR department with the onboarding process where they would have had many providers to onboard. It's one program. Sure, many different renditions of that around the world because cost of care in different regions are much less. So what we've been able to do through our distribution partners and our go-to-market is, you know, outstanding in how we've been able to deliver it, but it's through these trusted partners that companies are adapting to what we've delivered. Our technology, again, is our main differential, but humanizing that digital experience is vital to our success. And I think that's why people are adapting to it and moving forward. We have had about 1.3 million in sales to date, but our health plans went live about 7 weeks ago, and we're looking at this month, hitting about 700,000. Next month is projected to about 1.5 million in sales. And this year, you know, hopefully about 7 million in gross written premium. So what we're looking for today, primarily, we're not currently raising, but is introductions to distribution partners, whether it's brokers or other allied distribution partners that you may know of, and directly to companies with distributed teams. Thank you so much, and I look forward to chatting with you, connect online, LinkedIn, etc.
our next mentor intro. He is the founder and COO of Clear Cover. Please welcome Derek Brigham.
Good afternoon. My name is Derek Brigham. I'm the co-founder and chief operating officer of ClearCover. We started as a full-stack auto insurance company that started out of Chicago in 2016. We've raised about 5 funding rounds since then and have about 500 employees nowadays spread across the U.S. And I've had the pleasure of working with the founding team from Iris over the last several weeks as one of their advisors. And I'd like to introduce to you Margot Giles, who is the CEO of Iris. Iris is a agency sales and service platform that is cloud-based and allows service representatives and sales representatives to network on the system from virtually anywhere. Iris frees brokers from their data prison by giving them a truly open platform to sell and service P&C policies in a modular way with reimagined data structures and cutting-edge agent experiences. Iris's co-founder and COO, Margot, is an experienced agency operations executive and digital distribution consultant. Margot is the Technology Council chairperson for the Insurance Agency Owners Alliance and is a member of the Forbes Technology Council. So please help me welcome to the stage Margot Giles.
Thank you, guys. Oh, the mic is working. Wonderful. Thank you so much. I appreciate it. Thanks, everybody, for sticking around. My name is Margot Giles. I am the CEO of Iris Insurtech. And I'm going to take you on a little bit of a journey, and I'm going to apologize in advance because I'm a hand talker, and that does not work well when you're holding a mic. But we're going to take a little bit of journey back 15 years ago to baby Mar, who landed in insurance. And I think that's how everybody in insurance lands. No one wakes up dreaming of dealing with claims and policy premiums as their life goal. But I did, and I landed in the agency and broker space. And so basically with that process, I went and dealt directly with consumers and helped them with their policies. And what we found was that there was a lot of technology that was missing in that process. So eventually became owner of that agency, and then through merger and acquisitions became owner of 15 agencies and went out with this goal to really 5x rev. That was what we were looking to do. And we knew we couldn't do that without the use of software. So went to the open market, and unfortunately, there was nothing really available that fit the needs of what we wanted to do with the agency. So I did what a lot of agency owners are doing now, which is looking to build their own platforms. They either go to Salesforce or Pega or a low-code, no-code platform, and they try to make this round peg fit into a square hole. So through that process, I met my co-founder, and Lindsay, who's here in the back, and started to create a team of people that really had expertise in this area, almost like a unicorn collector. We went out into the open market, built the software, not just for our agencies, but for other people's, and then moved into the carrier space and created a consulting firm where we have been building some of these platforms for the largest companies in the world. So what did we find when we got there? Well, we found that we spend about $3 billion annually on this software, and it's not a luxury item. We must have it to conduct our daily business. However, the market is currently held by 2 incumbents, and those incumbents, the youngest is about 40 years old, and that software has not evolved over time. So what does that mean? That means as a broker who deals directly with consumers, I can't integrate new technologies like AI or machine learning. The systems currently really focus on policy and premium, which leaves my information about data about my customers sort of in the lurch. And that means our metrics are off by anywhere between 30 and 40% in any given direction, which makes it really difficult for me to run my business effectively. So because of all this, about 88% of insurance agency owners say that they're ready to kick these incumbents to the curb and purchase a new system in the next 1 to 3 years. So they want change now. Enter Iris. So we spent the last 5 years building Iris. It's a large piece of software, and it encompasses everything from client acquisition through the process of buying insurance to the back end, which is servicing those policies, creating endorsements, managing cancellations, everything from beginning to end. And you can see that Iris looks nothing like the banking or insurance software I'm sure some of you are used to seeing. So we built it on the tech side to make sure that it was open API and microservice based. And what that does is it allows our users to really get a 360-degree view of the client across verticals and locations. So they can integrate already existing software with our platform or use our microservices one by one together. So let's talk about traction. We are currently in the weeds of launching our MVP right now. We've got about 150 beta users on the program. That slide is actually outdated. We're about 8 million now in ARR in our funnel, launching now, and we just closed a $3 million seed round. So we are coming to market as we speak. So what are we looking for? I think at this point, anybody that has insurance verticals within either larger financial institutions, if you're looking for platform software that bridges the gap between possibly financial services and insurance, if you deal directly with the consumer, any of those are possibilities for us, so we'd love to meet. And then anyone interested in possibly getting in on a Series A round, I know how hard it is to raise now, so I will start that pitch today. But yeah, that's Iris, so thank you guys so much for coming, and I appreciate it.
Our next mentor intro, he is the former sales development lead at Better.com, or he was. Right now, he's really focused on helping startup founders develop their consulting for their go-to-market strategy. Please welcome Matt Akoth.
Hey everyone, I'm excited to be able to introduce you to Josh Patel from Marley Finance. As Casey said, I'm Matt Akoff. I'm a Charlotte native. Started my career with Red Ventures here in Charlotte. Was the former head of sales development at Better.com, and as Casey mentioned, now I help startups with revenue operations and go-to-market strategy. Through accelerators like Revtech, I've been able to mentor a little over 30 founders, and Josh is one that uniquely stands out because of his capacity for learning, his ability to execute, and his humility. So throughout this cohort, I've been able to watch Josh put the final touches on his product and take it to market. Conduct outreach on his own, getting new clients, implementing his product with his new clients, soliciting feedback, taking that feedback and further developing his product, really delighting his new customers, and creating a process that is scalable in his pursuit to make the best possible platform for business owners to offer financing for people running events at their venues. He has all the attributes of a great leader and an excellent operator, and I'm really looking forward to seeing what he does with this company. But anyway, this is Josh from Marley.
For the kind words. So a bit of background on me. Name's Josh, grew up in the suburbs of Chicago. And when growing up, I worked at my uncle's wedding venue where I saw the wedding planning process and how expensive weddings were. Fast forward a couple years, was an investment banker, and realized this is a huge opportunity that's not being addressed right now. The thing I say that really entices people is imagine going to a car dealership and not being able to get financing on your car. But the next largest purchase couples face is their wedding. And there's currently no solution in the market for that. And so our whole mission is to change how weddings are financed by helping reduce bad actors in the space and offering seamless lending solution for couples at the wedding venue. And right now, the market's pretty stale in their solutions. You know, a lot of wedding venues are using legacy software systems. You know, right now, a couple has to go get a personal loan at a bank, and you know, venues only accept cash or check payments. And the wedding industry is increasing more and more uphill costs. You know, the trend post-COVID is having larger and larger special events rather than a one-day thing. And many couples right away already go into debt. And it's a large undressed market right now. 2 million couples get married every year. Around $58 billion are being spent on weddings, and that's growing at double-digit rate. And the average cost is, you know, a cost of a new car. And so our product is a unified lending platform offered at the wedding venues that offers transparent and flexible payment plans to couples. And our whole value add for venues is that it's an instant payment management. So we already seamlessly integrate the payments platform from the couple to the venues, and it's an instant purchase. So right when they get approved, the venue already has the booking set. And that's why venues really want to partner with us. So the main 3 factors that we've had is that increasing lead conversions, so more couples are willing to book at the venue. The sales cycle is much faster. Rather than spending 2-3 weeks for couples to, you know, decide and find the money to pay it, they are now able to book it right away at the wedding venue. And the last thing is that venues have been able to increase their upsell way more, and so offer bigger packages to couples. And it's a huge market opportunity. Around $31 billion is spent every year in the United States with wedding financing, and we think that Marley is able to increase the TAM because of our ability to upsell. And so what we're looking for in a partner is helping us create the resources and the capital to expand and grow. We're right now with 2 venues in the United States, and we're looking to, you know, support the implementation of the other 10 venues signed up on our platform. In addition, we're looking for partners willing to facilitate a debt facility. And the last thing is anyone that's in the wedding industry that is more than helpful to help out in the business development. So thank you, and looking forward to talk soon.
Our next mentor intro, he is board chairman and CEO of Jun14 Technologies. Please welcome Frank Holt.
Hey, good afternoon, everyone. Chairman and CEO of Jun14 Technologies, Frank Holt. We're a Series B disruptor of the 911 emergency communications industry. Private network that allows states, municipalities to transition their analog network to an IP-based one so that when people are in need of emergency services, they know where you are, can receive text to 911, video to 911, et cetera. It's been a real pleasure to work with this cohort, and it's my pleasure to introduce Nedra Barr, who's the founder of Onboard XI. Her software as a service allows life insurance companies to streamline new customers more efficiently, increasing their profitability. The last 12 weeks we've worked on our pitch deck, go-to-market strategy, a new technology partnership, and I really wanted to work with her because she's a disruptor as well. You can really see the fire and passion in her eye, and you know that she's going to be successful. So please welcome Nedra Barr.
Thanks, Frank. We have automated and optimized nearly every industry out there. You can cut the cord to your cable via a chatbot. You can self-check your list at Target and then some. And you can order anything you want from Amazon and have it delivered right to your doorstep, all without talking to anyone, which is a convenience in a world where we want or even expect instant gratification, but with a moment's, instant gratification, but we expect that when we want it, right at the time that we want it. There we go. However, my industry doesn't work like that. The life insurance industry lags behind. These companies, their agents, and consumers are left with high-touch and highly manual processes that are very complicated to navigate. The life insurance supply chain needs to be modernized, standardized, and fully digitized to remove the cost from the middle, which we lovingly refer to as that messy middle. If we can save 15% or more from an insurance company's customer onboarding budget, this will have significant improvement to the future of the insurance industry. It'll mean that companies will have greater margins in their products, and it will mean that we finally will fix this overall agent and customer experience that is so problematic to us. We can fix this. The Onboard XI team is uniquely positioned to address these issues and fix these needs. I started in the industry when I was 16 years old, and here we are today, just a few years later, just a couple. But we have, just a couple of years later here. But we have really taken the steps to automate this industry and fix these problems, and our team is dedicated to doing that. Many of us have had exits. We're looking to be, our goals are clear and focused. We want to be the leader in life insurance onboarding. Fixing this industry means that we need to connect the sales side with the back office side, the insurance company processing side. The current onboarding experience process is a mess. It's fragmented, it's disconnected, it's inefficient, and it's very chaotic. It's a big problem. This is a $3 trillion problem in the life insurance industry. The life insurance processes are some of the most messiest processes on the planet today. Onboard XI will smooth out these processes by creating a true straight-through process solution. With our solution, companies will implement the product one time and then deliver it out to all the different distribution firms that sell the products. This means that the agents and the customers will be kept in the loop at every step of the process, and means that finally will really improve this agent and customer experience. The Onboard XI solution has countless benefits. Additionally, we have developed a new way to drive incremental sales while in the application process, which is a whole new market need. Today, industry solutions are fragmented, and many of them address the front office but not the back office, and vice versa. Onboard XI addresses all of these industry needs. The industry's talking about these problems. These are quotes that were overheard at the recent InsurTech Hartford Symposium. The market need is real, and the timing is right now. Recently, an industry study came out that shows that companies are looking to drive efficiencies in these areas. Onboard XI solves these areas. Our company is a purpose-driven company that's lean, and we're lean by choice, we're lean by design. No one takes a salary. We've set very lofty sales revenue goals for ourselves, and we have a plan to achieve those goals. Our goals are to be lean, I'm sorry, wouldn't you know? Lean, cash positive, and growth oriented. We are in a fundraise. We're raising a $1 million round on a $5 million pre-money valuation. We're about 30% subscribed. We offer a unique opportunity to share in the revenues for our first 3 deals, in our convertible note. We know that this fundraise right here gets us to, over a 2-year period, it gets us to our $14 million of ARR that we're looking for, and it will get us to our next growth round. If you're an insurance company, a distributor, or work in the life markets, come find us. We want to talk to you, partner with us. It takes a village. We're excited to be leading this journey and really proud to carry the torch to lead this journey and fix these problems for our industry. If you are an insurance company or anybody around this industry, please come find us. We really want to talk to you. Come join us, grow with us, mentor us, fund us, and transform an industry with us. We welcome your conversations. Thank you.
Hope you guys aren't tired of seeing my face yet. We have a few more companies to get through. Next mentor intro. He is a consultant and managing partner for Blue Growth Partners. Please welcome Joe Serber.
Joe Serber, managing partner of Blue Growth Partners. We do B2B growth strategies, including go-to-market strategies for those that are interested. We turn good ideas into profitable growth. My dad was an entrepreneur, and like most entrepreneurs, he scrapped and scraped and scrambled for every sale he could get. He was one of the roughly 4 million small contractors in the U.S. today that employ over 20 million people. He was a cash-only business. He mingled his incoming cash with his personal cash, paid everything on a cash basis. He had no credit history, no risk profile, so which means he was unbonded. He was unable to get insurance and unable to work for many government contracts and many larger general contractors in the area. He was limited in that ability. So when I met Satya and Ben and Nick, I was really excited to help solve this problem. There is a massive gulf of information between the small contractors, the brokers, and the underwriters. And I'm pleased to welcome Satya of Pledgex to help explain how we're going to fill that gap.
Thank you, Joe. Good afternoon, everyone. I am Satya, CEO and co-founder of Pledgex. As Joe mentioned, the construction industry is cruel to small contractors. They are often not able to get the financial services they need to grow, and Pledgex is on a mission to change that. Take the example of John here. He has a great performance record, and he's been doing subcontracts from other larger GCs, but he has never been able to get a job from a city directly. And that's because he couldn't pre-qualify for jobs. He didn't have the expertise to showcase his performance and win jobs. He also did not get the surety bond that was required by the city. A surety bond is a guarantee issued by an insurance company that assures the project owner, like the city, that the contractor will execute on time and as per budget. The bonding companies did not want to support John because the revenue that they could earn was not sufficient to cover the costs of underwriting. And that changed when John found Pledgex. John used Pledgex to create a professional-looking qualification showcase that he took to the city, and the city awarded him a job. And then he also got the surety bond that he wanted because we worked with the bonding company to provide insights on John's past performance. And they used that information to assess the risk and issue the bond. Now, the bonding company is happy that they have the right tool to support small contractors like John and grow their portfolio. And John's happy that he can grow his business by taking direct jobs from the city and with better margins. This is a massive market. As Joe was mentioning, there's about 4 million contractors doing $2 trillion worth of contracts in the US and Canada. The services that we offer is worth about $4 billion, just staying with the bonded market. About 2/3 of this, up to 1.4 trillion of jobs today, are not bonded or guaranteed. And for any financial service provider that want to break into this market, we are the technology provider that can make it happen. This is how it works. We connect contractors with the project owners and GCs, and we let them pre-qualify for jobs using information that they put on the application. The information that they put, we add additional data to that mix by collecting external data and provide insights to underwriters, agents, and even lenders to offer financial services to these contractors. Our platform is very easy to use. It's built with the small contractor in mind. So it's self-service, self-onboarding. We also create performance rating on these contractors by collecting reliable references from third parties like project owners that they worked with in the past. And we use all of that information, and as I mentioned earlier, add external data to the mix, sometimes even the financial service provider's own data, and then generate insights such as these. And these insights help them not only assess the risk, but also give value back to the contractor by offering them recommendations how to enhance or improve their business. We do have competition in the market, and there are quite a few of them, but we've selected a few and we've compared our services with them. We fare a lot better, especially when it comes to servicing small contractors. Our service is affordable, very easy to use, and we generate insights for financial service providers, unlike the others. And as you gathered by now, our primary target are the financial service providers because we make it cost-effective for them to enter this portfolio, enter this market, and for them, it's a nominal fee that they have to pay for our services. For buyers, i.e. project owners, the platform is free. The more buyers we have, the more contractors we get, and contractors themselves pay a nominal service fee for using our application for building their qualification showcases. And we have traction. We have started converting about 230,000 followers we have on our social media channel, which was a summer project that turned into a wild success, and we started converting them into the platform. We also have buyers and surety issuers, the insurance companies that are there, all leading up to a $3 million deal pipeline. And we expect to close about 600,000 of that this year, earning 100 million in ARR by about 5 years. We have the right team to execute this. Between us, we have significant experience in risk management, lending to contractors, as well as data science. And some of us have had successful past exits. We're launching a $2 million seed round shortly. Most of that money would be used for enhancing the insights that we have already built, as well as connecting that to the application. And it'll result in 24 months of runway with about 5 million in ARR. So in short, we have the right team to execute this vision, and small contractors need better solutions such as ours. And we're calling on all financial service providers in the room today that want to access this huge market opportunity to work with us, use our services. Thank you.
Our next mentor intro, he already introed, so you're going to be seeing his face again. Please welcome back to the stage, Frank Holt.
It was my pleasure to mentor Victor Salinas of Smart Console. They are software as a service that allows the finance function to streamline their reconciliation process. I wanted to get involved with them because I'm a former CFO, and it was such a pain to reconcile monthly, quarterly, and get those numbers closed efficiently. Also, Victor has traction internationally and was looking to break into the U.S. market, and I felt strongly I could help him do that along with the other mentors. Victor has a quiet confidence about him and a presence, and it's been a great to work with him. So please welcome Victor Salinas.
Hi, everyone. Well, my name is Victor Salinas. I am the CEO and founder of Smart Console, the platform that simplifies business financial decisions, focus on what really matters, growing the business with control. We started the company in 2018 when a financial institution required us to build something to control the cash flow and financial projections. I remember that it was a nightmare for finance teams to collect all this financial information. They have to analyze thousands of transactions, process multiple data sources at the same time, and they have to deliver this information on time. Some of them try to automate the process using spreadsheets and macros, but the thing is that those formats change constantly. So it's really hard to maintain that information. So most of the time, finance teams need to run out of time to deliver this information on time. So based on that experience, we created Smart Counsel as a platform that helps companies to automate the full financial reconciliation process from the beginning to the end. So we help companies to identify frauds and inconsistencies in real time. We also help to save costs and time, reducing the time to doing all these repetitive activities. And also we help them to increase the accuracy of financial reporting. So, but how Smart Counsel works? Well, it's a three-step process. First of all, we collect the data. We have more than 70 different formats to read in the application, so we can read basically any kind of information that you have in the company. So we can read bank statements, we can read accounting information, we can read PDFs, XML, whatever you have it. You don't need to modify anything. We're gonna go directly to the source to read all this information. Then we're gonna clean, classify, and standardize the information because, again, there's not a standard in financial information. After that, using our strong matching engine, we're going to have the ability to identify inconsistencies in the platform. We also have the ability to trace all these outstanding transactions every single period, so you're not going to lose the traceability about what's transaction still left in your cash flow. And finally, you're going to have the ability to generate all these financial reports on a daily basis instead of waiting at the end of the month. So finance teams can generate more accurate data with less manual work. They can customize business rules based on their needs, and also they can create projections and indicators on real time. For CFOs and VP Finance, they will increase the efficiency and productivity of finance teams, access real time of the information, and ensure that the company is protected against financial fraud and inconsistencies. So, based on compared to our competition, our unique matching rules engine, the faster implementation, and the easy integration with many financial formats give us a huge advantage compared to other solutions in the market. Based on our current traction and the trend the companies to automate the financial processes, we have a great momentum right now to continue growing in the North American and Latin American market. We currently focus on two different markets, financial industry and insurance. But we are looking for new markets like retailers, telecoms, hotel industry, and more. The revenue stream is based on a subscription model. And we have two different models, depends on the size of the company, the volume of transactions, and the number of data sources that you want to process in the company. Our average ticket for our customers is $14K per year. Like I mentioned before, we started in 2018 with only one financial institution. Now we are having operation in 6 different countries with around 15 customers. We closed 2022 with $250K in revenue. And right now we're focused on banks, credit unions, fintechs, and insurance companies. We had a great accomplishment last year, but this year is a hockey stick for the company. So we have plans to add machine learning, to add some predictions and projections for our customers, but also we want to add the ability to read any kind of file in the world. So we're going to have the ability to read any PDF that you have from your customer, from invoice, whatever you have, we're going to be able to read it from the source. We are also looking for our second investment round, so we are planning to raise around $750K to give that boost for the company for the next 2 years. We have a multicultural team with more than 20 years experience working in the financial industry. So we are experts in reconciliation. We also have the support and guidance from great mentors and advisors from many different fields, including marketing and sales. And I can just say thank you to those organizations that have been helping us to grow our business into the next level. So what we're doing right now is to get into the next one. What are we looking for? Well, if you are a customer that you want to save money, they want to improve something in your financial processes, if you are an accounting firm that is looking to add more efficiency in your customers, or if you are an investor that you're looking for investment for an innovative and growing company, here we are. We are Smart Counsel, the platform meant to be the next first choice for financial reconciliation in the market. Thank you so much.
For our next mentor intro, he is the president of Hayden Technology. Please welcome Mark Woolen.
Is this on? There it goes. Hello, I'm Mark Woolen. I'm the founder and chief consultant of Hayden Technology. Hayden Technology is a consulting firm. We help banks and credit unions strategize, prioritize, and implement digital technologies. I've been involved with Revtech Labs, formerly QC FinTech, for a number of years. Have been pleased and honored to advise a number of FinTechs as they go through the cohort program. Recently, I've been introduced and gotten to advise and visit with the founders of Trace. Trace is an AI company. They leverage data and analytics of recent information. Commercial lenders have a challenge, a real-world challenge, where the information that they get involved with their the corporations that they lend to, the information is late. It's late to come. It's not relevant. It's in the past, so it's a rear-looking view to make decisions, and leveraging AI to mine unstructured data can create more relevant decisions, more recent decisions. I'm excited to present, I'm honored to present the founder of Trace, co-founder of Trace, Sony Gabrielle. Welcome.
Thank you, Mark. I hope I'm audible. Hi, everyone. I'm Sony Gabriel, the CEO and co-founder of Trace. I usually start off asking a question, which is like, have you heard of any banks or lenders who have taken too much risk lately? But then it's too stale, so I'll skip that and come to the topic. So I'll present some interesting statistic and take from there. The US commercial lending market is worth $2.8 trillion, and the delinquencies were at a historical low for the last year or so. But according to S&P and Moody's, it's supposed to go up in a recessionary environment, could even go up by 5%. Now that's around 168 billion in losses. Now if you look at the global lending market, commercial, that's around 600 billion potential losses. Now this makes early risk monitoring key to preventing portfolio losses. And the question is, how can you proactively predict or prevent delinquencies? And that's where I want to present another interesting statistics, which is, according to Gartner, 80 to 90% of all the data that's generated on a business is unstructured in nature. Yet lenders make most of their credit risk decisions based on 10% of that structured data. And that's a problem. And this is what we actually wanted to solve. And the fact is that unstructured data is actually going 3x faster than structured data. Now, this gives us the problem statement that we are trying to address, which is the current portfolio monitoring systems are largely ignoring the unstructured data, which can contain leading signals of business distress. Now, what is hiding in this unstructured data which makes it so important? Right? It's because you're missing out on real-time information that can be coming from business red flags to alternate insights on borrowers, and all of which are early risk signals. Now, what we do at Trace is we solve this problem by looking at all of that unstructured data and then converting that into a numerical index called the Business Sentiment Index, or the BSI, and helping lenders use that in their workflows. So helping them look at that data that is today missing in the unstructured portfolio monitoring. Now, we essentially go through all of this data, like I said, look for red flags, and we automate the whole process. So making it easy for lenders to include that into their workflows. Now, how do we help commercial lenders? We help them spot problems before it starts impacting their business
impacting their bottom line. And we help them make better data-backed decisions by leveraging all the data points. We can help them take explainable decisions because we can provide actionable alerts from all of this unstructured data. And we do automation so that we help cut research time. Now, how does Trace work? We connect to all the publicly available unstructured data sources. Now, this is data sources like news, reviews, social media, and all of it, and then compute the BSI. Now, Trace is multilingual, and it's available as an API or as a web application, whichever way you want to consume it. Now, we can also go one step further, and we can now combine all of this BSI that we have computed from the unstructured data with your financial structured data to create a more holistic risk index, which we call that the EWR. So that's also something that we can do. So essentially, we are helping them monitor all the data points on a business. Now, let me walk you through how a business lender would use Trace. Now, you could be a portfolio risk manager or a chief credit officer or anyone in the team. They would access Trace via the application's login page, enter the details of the businesses they want to monitor, and then get all the information about the businesses to help them make decisions, like the BSI alerts, the automated red flag alerts, and all of that stuff. Now, there are many other unstructured data use cases as well. Today, we are focusing mostly on portfolio monitoring, but think of prospecting as a use case. Think of reputational risk monitoring as a use case. Think of counterparty risk monitoring as a use case. You're not even looking at people with credit risk, but could be looking at dealers, looking at tenants, broker monitoring, and so on and so forth. Now, in terms of traction, we have 2 paying clients. One is a case of portfolio monitoring, and one is a case of counterparty risk monitoring. We have 4 active pilots going on, and we just converted one of them, a large credit union in the West Coast. And we are also in pilot discussions with a few of them. We are looking at community banks and credit unions initially, so we have a huge pipeline that we are going after. And in terms of the team, I'm the CEO. I also have my CTO and my CAO here, who are the co-founders. And Geeta and I come from a technology background, so we spent more than 2 decades in the tech space. And Joe comes from a commercial lending background. So we have a team with the right blend of technology and domain experience. We are also ably supported by an advisory team today, most of them coming from a credit risk or an investment background. Now, in terms of what our ask is, we are looking for market access to introductions in commercial banks, community banks, credit unions, fintech lenders. We're looking for partnerships for sales and distribution or technology partners, because we know we have something which we can complement their existing service offering and bring value to both sides. And we are also looking for connect with investors, because we are at that stage, we have early traction, early market validation, and we are looking to roll Trace out to more customers, and we are seeking a seed round of $1 million. And the fund will be used mostly to roll out the platform and also to increase our sales and marketing efforts. And that kind of brings me to the end of my presentation. Love to connect with all of you. And I want to thank Revtech Labs for this opportunity to actually showcase what we are doing. Thank you all.
Our next mentor intro, he is the managing partner for Inbox Monster. Please welcome Matt McPhee.
Our introduction. Is it working now? There we are. There we are. Well, thank you, everyone, and appreciate everyone that is here. I'm going to flip this on its head just a little bit. In previous events like this, we did a fun thing for the founders, where when we applauded, we stood up and stretched our legs and applauded the introduction as the founder came on stage. I know you guys have been sitting for an hour and 45 minutes now, so in a minute, if you'd be so kind, when I introduce Shelly, to stand up and give her a round of applause, stretch those legs. We have 2 more left. We'll make this introduction fast. My name is Matt McPhee. This is my 8th cohort with Revtech Labs, and one thing that I can say through all 8 is that every additional cohort, the companies get stronger and stronger and better and better. That is true of this cohort, and this next company that's presenting today is no exception to that. From their launch in 2018, True Flood Risk has taken a leadership position in revolutionizing the property risk management world through their innovative, patented AI-driven solution that creates property risk data and insights that are critical all the way down to the individualized property level. This platform, though, does more than just creating property and flood risk data. It actually identifies and helps to implement the most optimal mitigation strategies for over 200 million properties worldwide. And because of the power and the novelty of the data this platform generates, banking institutions, insurance institutions, and federal agencies all use this solution to help their clients develop more optimal risk flood management policies, insurance pricing policies, and more effective communication and mitigation strategies. So with that, I will tell you it's been a privilege working with the next presenter. I'm really excited to see where she takes this company next. And if you would be so kind to stand up and stretch those legs and give a big round of applause to True Flood Risk's founder and CEO, Shelley Closa.
Thank you, everyone. I'm going to take your mic because this one's not working. Good luck. For the warm welcome. I'm Shelley Closa, founder and CEO of True Flood Risk. The frequency and severity of flooding is on the rise, not only from major weather events known by first name, Ida, Ian, Katrina, but also from localized events that cause flash flooding, like what happened here in Charlotte a few nights ago. Interestingly, we're also having a major chain of all of these losses, billions of dollars, causing losses to property, human lives, and creating chaos in our communities. We're also beginning to see a change in the insurance industry, where insurers are beginning to pull out or no longer write new or offer renewals to properties for flood risk and other perils due to unsustainable ways of viewing risk. For over 50 years, flood maps and flood models have been used to help determine flood risk. They help tell where water will flow and at what water depth. But what they have not done is to tell us at what point a specific property will flood. This key data point for estimating the structural height of the house, which is the distance between the ground and the lowest finished level at or above grade, it's called first floor height. And you're going to hear me mention that throughout this presentation today. And it's the key missing point to helping the world figure out and resolve our flood crisis that we have. When you input first floor height into your pricing premiums or mortgage lending practices, you will know at what point a property floods, so you can price flood insurance according to the risk. Historically, this information was only available by physically going out into the field and doing a land survey to complete an elevation certificate. So True Flood Risk is changing the way that we view elevation certificates, and we have an AI-driven property risk management platform that instantly estimates the structural height of a property. We have a patented technology that uses images to detect this information and provide it, and we're working with banks, insurers, property owners, and renters to help them understand flood risk. Our data is available as simple as API, as a data as a service. We also have a software, and we have many customized features where users can upload their own data and images. We work with, again, property owners and renters to provide them free flood reports on their respective properties' flood risk, and we also provide mitigation strategies based on how long they plan to live in their homes. We also work with local governments, floodplain managers, and resilience teams to help them look at their community at scale to see how incoming weather events might impact their flood risk. And also, if they do mitigation strategies, how many properties will no longer be at risk so they can start to quantify the impact of their work. From the insurance and financial institution side, our information is used for underwriting to help accelerate underwriting, costing, risk selection, and new business development, and also on the claims side. The landscape is rather big for property space in general. We take a different approach. We're using a street view perspective. We license images from 13 different sources or images uploaded by our own providers. And that allows us to provide a more accurate first floor height data point that fuels our entire platform. Other folks have tried to just use foundation type. But the question is that, foundations could be, they vary. There's no particular standard. So in this particular case in Norfolk, Virginia, a crawl space could be 2 feet, a crawl space could be 4 feet, or the actual is a little over 1 foot. And it has major implications with respect to estimated losses, replacement costs, and even house raising. As I mentioned, our data is available as a service, software. We also do marketing, outreach, as well as ESG reports to help with communities at scale. Our team is comprised of leaders in AI, former Tesla software developers, climate risks leaders, scientists who have worked on the IPCC climate change report, and more. Today, the market size is huge. There's 250 million properties in the world that represent over $228 trillion of values at risk. Every year for the past 30 years, there has been over $32 billion worth of losses each year. How we look at it from the true flood risk space is the value of our data. What do we bring to the table? Well, based on a pilot test with one of our clients who incorporated first floor height into their underwriting and their claims process, they realized if they used true flood risk data, they would have saved $1 billion a year because they would have written a flood insurance policy differently or not at all. That is the impact of what we're doing at True Flood Risk. We're proud to work with a number of leading insurers, reinsurers, local governments, and academic institutions as well. So today we're here, we're interested in talking to more insurers, financial institutions, local municipalities. If you are concerned with your portfolios and your communities and how you can better address your flood risk, we welcome the opportunity to connect with you. And later this year, we will start our early stage of fundraising elsewhere as well. And lastly, in closing, I invite all of you to visit True Flood Risk to get your free flood report and learn your own family's flood report, True Flood Risk. Thank you very much.
Thank you for bearing with us. I know this was long. We have one more company for demo day. But for the next mentor intro, or the last mentor intro before we have opening remarks, I would like to present Dan Ward. He is from Midwood Partners. He's a managing director, and he's also an independent management consultant. Please welcome Dan Ward.
Hello, everyone. Always good to be the last group before the bar. My name is Dan Ward. I am the owner and managing director of Midwood Partners Consulting, Inc. I've got 30-plus years in banking and financial institutions. I've been involved in fintech for 6+ years, and it's a pleasure to be here today introducing Vector ML Analytics. I'm excited to introduce Jade Clark, COO of Vector ML Analytics. Vector ML Analytics is a next-gen financial forecasting software for banking and lending institutions. Vector's staff understands asset liability management, financial planning and analysis, regulatory and board requirements, and Vector ML Analytics software is designed to increase returns, lower risk, and manage liquidity. Personally, I've been impressed with Jade and the team. They're not your average fintech. They are at an interesting point in startup perspective. They've got revenue-producing clients, anchor clients, and production-grade software. Yet they are still building capability and able to work with clients to design based on client needs. In my opinion, They're very suitable for small banks and mid-sized banks in the US. Basically, a vector client engagement team provides functional and technical resources and next-gen production software. Without further delay, please give Jade Clark a warm welcome to Charlotte.
Hi, everyone. Thank you, Dan, for that kind introduction. I had Eye of the Tiger playing in my head as I walked up here, so I want all of you to picture that as well. I believe that there are a few CFOs here today. So, Vector is a financial forecasting platform aimed to help the CFO of a bank or a lending institution. What it does is it helps them model their income statement, cash flow statement, and balance sheet over a 5-year time span. So why do we need this, and why now? Well, Silicon Valley Bank has done a lot of our marketing on our behalf. Yes, as you know, interest rates are rising. There's a lot of volatility. We saw this in the 1980s. Well, I didn't see it. Some of you saw it. I read about it. And we're seeing this again now. Why is this a problem? So you'll see these 3 bubbles here: profitability, capital, and liquidity. These are the core of any bank or lending institution, and they're a very delicate balance. It's very difficult to get them right, especially in times like this. Current processes are highly manual. They are very fragmented and timely, and that causes a lot of inaccuracies. So we said, how do we fix this? Surprise, surprise, AI. We're combining AI and object-oriented design to offer CFOs a robust financial modeling library. This allows them to run multiple solutions, multiple scenarios, and give them a full 360-degree view of their financials, just at the drop of a hat. How do we price this? We're very reasonable. We understand that complexities remain the same while resources don't. So we look at the size of the institution, and that's how we price it. In terms of go-to-market to the investors here, we have 11 institutions in our pipeline, totaling about a $1 million valuation that we've met through various methods. You might be thinking this brilliant idea must have come from at least 10 years of experience in the industry, and you would be correct. Sadek Safarini, the CEO and founder, spent 12 years in the industry. He worked for over 7 institutions. 2 of them went bankrupt as a result of this issue, and he decided to tackle this issue. He then met myself and Philip Morgia, the CTO. He brought us on board to bring his dream to light. This is our progress. We're a small team, but we've accomplished so much in 2 years. We have 110K of ARR, we have $500,000 in investment, and we have a $1 million pipeline. Our ask, we have a booth outside. If you're interested in using this product, or if you know anyone who might be, please come talk to us. Also, if you'd like to work with us, or if you'd like to help fund this project going forward. Thank you so much, and thank you to the Revtech team for making this possible.
All right, thank you so much, everyone, for sticking through Demo Day. Hang tight, because we have 14 more companies to go through. I'm just kidding. So at this point, I'm actually going to let the investors excuse themselves, regroup, and kind of talk about what they heard. We're going to make our final $1 million investments. Real quick, before we kind of go and break for the day, I'll just kind of wrap things up. First and foremost, thank you for joining us today. We will be back again tomorrow at 9 a.m., kicking it off. It's a little bit shorter of a day. We'll be ending around 4 o'clock with, of course, everyone's favorite, a closing reception. So also happening will be the closing reception today. We have some live music happening out on the terrace. And at 6 o'clock, we're going to be launching our new initiative, which is the Southeast Women in FinTech, which is our new passion project of bringing the women in FinTech, particularly in the Southeast region, together to support each other, to collaborate, and to celebrate. The launch event is going to happen here in Charlotte, obviously, but if anyone wants to talk about where we can host it anywhere else in the Southeast, please connect with me. I would happy to talk about that and get those plans in motion, because obviously we want to represent this group across our region. I'm trying to buy some time for the investors, if you can't tell. So starting tomorrow, we're going to have Manolo Sanchez, the former chairman of BBVA Compass, to kind of kick us off, as well as Rodney Hood doing a fireside chat with Aubrey Haas, one of my personal favorites. They'll be also doing a discussion later tomorrow, so please come back. I'm really hoping my investors are quick collaborators, because I'm running out of things for you all. I'll pause for a photo. Let me just take a quick pulse check. I know I gave them 0 time to really collaborate here. Andrew, are we close to a decision? Nope, okay. You guys are stuck with me, I'm sorry. I know Dan Roselli would be much better at vamping than I would be, so he can watch this recording and critique me at my quarterly development lunch. Yep, nope, I will keep vamping. Thank you so much. Do a little tap dance. All right, awkward silence over. Andrew Hicks is here with the final results and the final investment.
The results are in. Thanks for bearing with us. Let's, if we haven't already, let's give everybody another round of applause. I thought that was a fantastic job by the founders. I feel very powerful holding this information from everybody right now. But anyway, I'll get into it. So, the top 3 most fundable pitches from this evening. So, starting with number 3 is Nedrabar and Onboard XI. Number 2 is Margot Giles and Iris. And the receiver of the most fake capital tonight is Shelley Close and True Flood Risk. So let's give her a big round of applause. Congrats, Shelley. Unfortunately, I don't have a big check to hand you or anything like that, but congratulations. And fantastic job to all the companies that presented. We can't thank you guys enough for being a part of the demo day. Credit to every single founder, all the work that they put in over the last few months definitely showed out here with the demo day. So thank you all.